Right. Well, the market's
Yeah.
taking swings up and down, and we are seeing more and more folks who are interested in the investing space, but there are commonly going to be misnomers and bad narratives, and so we're going to walk through them today, right? So,
Right.
why don't we introduce you and give folks a little bit of an insight into your background?
Sure. So my name's Greg Vartanian. I am CEO and president of a company called Racadia Corp. And also Racadia Capital. I am a licensed realtor in New York and New Jersey and have been for several years now. And basically, what I do is I work with my partners and investors in the real estate space to find real estate properties for investment purposes. We also do hard money lending, and I also own part ownership in a construction company here in New Jersey as well.
And was there like an origin story, or was it kind of real estate investing was always your shtick?
I dabbled with real estate for like the last 30 years up until about 2015. And then in 2015, I got into tax liens with a partner of mine where we would actually bid on tax liens down in Florida and a couple of other states. And we actually picked up a few fix and flip properties over I want to say almost 2 year period. And when I started to, make money in that space, I realized that there was a lot more opportunity than to just buy a casual property, live in it for a couple of years, rehab it at leisure, and then when I was done with the property and felt like it was time to sell it, I would list it and sell it. It wasn't until 2019 where I decided with some realtor friends of mine that it was time for me to get my license and that I really should take advantage of the skills and the knowledge I have. I'm pretty handy. Like I can rehab a house on my own as well. So I have a good knack for figuring out what a rehab budget would be and what a house would need as far as rehab in order to get it to, a state where it could be sold at top dollar.
I think that's one of these. Um, I feel like that's one of those factors that a lot of people are remiss in focusing on, right? Oftentimes when I talk to other folks, whether it be agents who are new to the space or, if they're folks who are just interested and, they hear something from their neighbor or their, drinking buddies and they're like, well, we just, as long as the houses in the area sell for like $5 million, we should be good, right? I'm like, no, no. Um, there's a lot to it. And unfortunately, it is as simple or as complex as you need it to be, but I feel like it depends on your approach. So I think this is one of the reasons why I wanted someone like yourself on because, um, it's one thing for me to say it, but I feel like the more people who can voice their nuanced approach to things, the easier it'll be for them to wrap their head around. Um, but you did mention that I mean, well, it would make sense rather that at this stage of the game you've gotten adept in figuring out how to run these numbers, right? Is there kind of, if you were to train someone to find you these deals on a very high level basic approach, is there kind of like a formula you have in mind?
Yeah, so I do with my partners 6 real estate events per month just in the fix and flip space. So when we're hosting these events, I want to say 80% of the people are newcomers. They've never done a fix and flip before, and we educate them on just the basics of what they need to do. Typically with the numbers, that's a big thing. You got to be able to crunch the numbers and you got to have some solid numbers to work with. You can't just throw numbers up in the air. Our formula pretty much consists of 3 sets of numbers. The ARV of the property, which a lot of people will use comps, recently sold properties as comps to determine, what the ARV would be. That's a good source as long as you have access to like an MLS or something where you can pull some solid numbers. The other thing is to look at is the type of property and what neighborhood it's in. If the neighborhood shows that other properties have been rehabbed recently within the last year or so, that's an indication that you're going to get top dollar for that ARV because there's a demand for it in that neighborhood. All the other properties that were in the neighborhood have been rehabbed and they bring up the value of those homes in that neighborhood. The other number that you really want to focus on is the rehab, right? The rehab is going to be the second figure that tells you, how much money you're going to put into that house. When we do our formula, a lot of times we have the ability, because we've got the experience, to determine how much that rehab is going to cost. And I would say me and my partners, we're probably in a margin of error of like maybe 2 to 3%, which isn't a big deal at the end of the day. Even if you're doing $100,000 rehab, what's 2 to 3% of that? Couple thousand? That's not a deal breaker. And then once you have those two numbers, then you have to decide, you as an investor, how much return on that investment are you looking to make? Typically, we don't buy or pay more than 75 cents on the dollar. We try to get as low as 50 cents on the dollar, but that's not realistic in this market. It's very hard to get. But during the pandemic, and even before that, it was easy to find properties at 50 cents on the dollar. And what that basically means is that, if a house is worth 500,000 and you're willing to pay 50 cents on the dollar, that means the top dollar you're willing to pay that owner of the home is 250,000, right? And then whatever rehab amount you put in there, that's in addition to the 250, so you're all in, and then you have carrying costs, closing costs, and everything. And depending upon where you're at, it could be between 10 and 12% for a rehab that's going to take you between 4 and 6 months to get done. So at the end of the day, that ARV of 500,000, after it's all said and done, you really realistically should be looking to make somewhere in the neighborhood of 125 to $150,000. But again, in this market, it's very hard to do. Typically, now what we're seeing in this type of market is probably somewhere in the neighborhood of, we're paying, we're doing deals at 75 cents on the dollar. So really, at the end of the day, you're probably taking home somewhere in the neighborhood of between 50 and 60K per rehab.
And where would you typically find these deals, or what if you had to make an avatar for the type of deals, you know, or the bucket that these deals fall into? How would you describe them?
It's a combination of the strategies that most investors will look. There's still people out there playing the pre-foreclosure sheriff sale space. It's a tough space to play in, but there's still opportunities there if you're interested. There's still the short sale space. There's guys that play in that space, and will try to broker a deal between the seller or the owner and then the banks, and you could still make some good money in that space. And then there's the other avenues of, you door knock, you cold call, look at tax lien lists, and other types of secondary note market lists that some people can get their hands on and try to broker a deal. A lot of those types of sources, you're probably going to find a better deal at maybe 60, 65 cents on the dollar versus a short sale or a pre-foreclosure or sheriff sale deal. Because when you start to get into those scenarios, the margins start to narrow because everybody's already put their piece of the pie that they want in that deal, and not everybody's going to get what they want out of it.
Absolutely. And one of the reasons why I ask is,
Yeah.
I think oftentimes there, I find a situation where I'll go into starting to explain of how certain different investment strategies will take, and they're like, well, who the hell would sell me, $1 million house for a fraction? I'm like, well, let's think of this logically, right? In real estate, we have common factors of why people sell the house, but oftentimes that you might see in this scenario is maybe there's a death in the family, maybe there's a divorce and they need to sell ASAP, maybe there's a hoarder situation because grandma had everything on the roof and they just don't want to deal with the headaches, right? Maybe they're elderly and they realize that they haven't kept up with the property and they just didn't mean to, right? A lot of times, by definition, a fix and flip, right? Or even if you are in a buy and hold strategy, more times than not, will you get this, turnkey amazing deal? You can. Is it possibly going to be something on a high frequency? No. If that was the case, then you'd
Yeah.
have, dude. I mean, the people who will swear that has to be the way. I'm sorry, I got a bridge in Brooklyn to tell you, right? It's more times than not, it's going to require elbow grease or some kind of finagling for you to make sure that you are adding value, right? Whether it's forced appreciation or if it's just some kind of creative mechanism for you to get in and polish the stone, right? And this is where a lot of people get lost, I think. And so for me, it's like, well, I find it, oh, by the way, I find it interesting that we are in that 75 cents to the dollar range. And it does make sense, right? And I do know that there are a lot of folks who read a couple books and they're like, oh, well, we have the 1% rule, we have the 30%, 20% rule. I'm like that is a good, I guess, rule of thumb. But I think the other side of it is understanding the climate that you're in. So,
Yeah, absolutely.
I've had some folks like, oh, I can't look at this. It's not meeting the 1% rule. I'm like, okay. I mean, look, far be it for me to judge someone on their buy box, but just out of curiosity, is there a particular reason, or is it, and it's just, oh, because we read a book and it has to absolutely be this way. And I'm like, are you even interested in looking at any of the financials that come with it, or are we just saying 1% yes or no? And different strokes for different folks. I mean, me personally, I just got to that point of if it makes financial sense, I want it, right? And that's just this is not personal financial advice. So for anyone out there watching, or this is my personal approach to things. So please don't, right? Do, and from a tax perspective on my end, I also have a slightly different strategy, right? It's not vastly different from most, I would say, but I think for me, I guess maybe it'll also help to clarify. In my broader opinion, right, just on a general note, if you are in a situation where you are trying to generate like capital, I would say, and let's, I guess, from cheap to not so cheap would be, if you have no funds, you need to generate capital quick-ish, right? Provided you have systems and you really are good about driving like workloads and work ethic, go learn how to wholesale, right? It costs you almost no money depending on your system. And if people are dying, like the bottleneck is always going to be finding deals. If you could find deals, and you can't find an investor, I don't know what to tell you. Either the deal is terrible or you're not, like, you need to focus on marketing your deals. Is my opinion. On the other side of it, you have flips, right? If you're able to have the capital to lock in the property. And one of the things that gets me nervous is when people say, oh, well, the construction cost is going to be $100,000 and that's all they put in. And I'm like, one of the things that gets me nervous is when people run their math and they're like, oh, well, the quotes we got is, let's say, $300 a square foot, right? And I'm like, okay, that's all well and good. Is that the construction itself? Yes. Okay. I don't see any math here. You said you financed this. Where's the mortgage amount? Where is your average utilities? Where are all these? There's no calculation for your monthly burn rate. Did you think that you're just gonna pay a contractor and they're not gonna need power or sewage or water, or you're not gonna pay a mortgage in that time? I don't like. Where is where are the rest of the numbers, right? And I think that's one of the pitfalls we need to be careful on.
Yeah, absolutely. A lot of times I tell these people that come to our events that are just starting out that you don't want to do your first couple of deals by yourself because you can get burned very easily if you don't know what you're doing. I always tell them whether you're starting out as a wholesaler and you need cash to kind of build an investment pool, or if you've got some money and yet it's just not enough, you want to partner with a seasoned veteran, somebody who's been in the business long enough, who has resources. Like, a lot of times I'll tell people, if you're just starting out and you think you're going to be able to do this alone, can you go out and find a reliable contractor that's not going to stiff you for the job and the money, right? Most people say, no, I don't have anybody. Okay, so then you really want to work with somebody who has the resources. Do you have a good attorney? Do you have a good title company? What about lending? Do you got a good, reliable hard money lender, right? These are all tools that an investor needs to be able to have in their pocket ready to go when they're starting out to do any deal, whether it's their first or their 10th, right? And with wholesalers, I tell them, look, the investor community, they need to know who you are. They need to know that you know what you're doing, right? A lot of times I'll get people who are wholesalers who will send me a deal, and I'm like, is it under an assignment agreement? Oh, I'm working on it. Well, don't knock on my door until you've got it under an assignment agreement, because I don't want to talk to somebody that's still trying to negotiate a deal. And now two or three other wholesalers come in and they offer a little more money. And now you wasted my time trying to get a deal that you didn't have under an assignment agreement. So that's always a big stickler for me. You got to make sure that you have something in writing from the seller. And even then, it's not 100% guarantee. I've heard horror stories of people saying that they had an assignment agreement and an attorney for the seller did an end run and got another buyer to buy the property at $10,000 to $15,000 above what the wholesaler was going to get it for. So, there's all kinds of shady stuff that goes on out there every day. I've seen and heard just about everything out there. So at the end of the day, whether you're starting out or you've done a couple of deals, you still really want to make sure you know what you're doing and work with somebody that's got the experience. That's the bottom line. And the number crunching, it's just a matter of, you got to understand, make it, we have a spreadsheet. Believe it or not, I still use a spreadsheet that's got a ton of columns and rows in it. I pull in data like the square footage of the property, the number of bedrooms and baths, the taxes, and then from there I have a formula that says, okay, for every column and row that there's a number, take that number and do the following with it. And then at the end of the day, it tells me what I should offer at 50 cents, 60 cents, 70 cents on the dollar. And that's when I start my, pick up the phone and offer the seller the lowest number I'm willing to pay, and then the highest number I'm willing to pay if the deal keeps, falling because the owner is just being greedy and wants top dollar. At some point, you have to say to yourself, when I've reached that final number at 70 cents, 75 cents, if the owner isn't willing to negotiate or play ball, then you just turn around and walk away and say, you know what? I know you're going to get stuck with that property for another month or two. And then, you just wait to come back. I'm sure at the end of the day, they might be willing to play ball at that point because they had no takers. So you can't take it personally when you're doing a deal, and you got to stick to your guns. Your numbers are your numbers, and that's that.
Mm-hmm. And I think this is also like the split. Like, as an agent, oftentimes people come from other industries, right? And so one of the prevalent issues is that people have an employee brain versus a business owner brain. And likewise, when it comes to real estate, there's often this inability to split the difference between a residential, like your primary home, this is my house logic, versus investment, right? And so, for me, as you went through that example, if someone's like trying to get top dollar, for me, if they're going top down in terms of market value, for me, that reads as, this is an investment. This isn't going to be an investment opportunity, right? And this is someone who, this is my home, and they don't see, right? This is where I raise my kids. On the buy side, it's, they're looking at, oh, do I like the foyer? Do I like the trim? Do I like, from an investment mindset, it's what's the square footage? What's the bed bath? What is the market, like, what is the rent roll or possible income that I could generate from this period, right? Does like binary math make sense? I don't care. I don't care that the floorboards are a different tinge of brown. It doesn't matter, right? Is it rentable? Is it marketable? And can I, if it's in the case of rehabs, can I do it in an economical, safe standard, but still make my ends and returns after, right? And in a lot of ways, I think I've enjoyed the investor space for that reason, right? It's not hard. Well, I backtrack. It's not complicated, I should say, right? On the actual math running portions, because most of the numbers you could find out, right? And for me, generally, I feel like figuring the math in terms of calculating the rehab might more likely be trickier, right? Because like property tax, you can look up. The square footage, you can look up. The bed bath, you can look up. And depending on where you're finding your information, you can find the zoning of a house. So you could probably figure out what the best use of this property can potentially be, right? And the other side of it, that latter part, I fully admit, experience will definitely help, right? Because who the hell knows what an R6 is supposed to be, right? As opposed to an R2, right? But you could learn that.
Right.
thing that swings from neighborhood or region to region might be your construction costs, for instance, right? If you don't know what the hell you're looking at, you think all we need to do was replace a couple electrical receptacles and maybe paint over the drywall. Come to find out that the floorboards are rotted out and you need to do a gut reno, right? I think it's one of those things where like
Right.
walk with. For me, it's like a good contractor is worth their weight in gold, right? Because too many times, like how many times have you walked in and like, oh, it was freshly renovated, and as soon as you walk in the door, you're like, this was a weekend warrior job. Like, there's no way I'm gonna trust any other workmanship in this house. And then you walk with a contractor, and you're like, wait, so this cheap piece of paint on the bottom, I'm seeing little water stains. Come to find out, there's like water damage behind the walls. The studs are starting to rot out. Maybe there's termite damage. And like, you guys really think this was gonna make sense? No, but it's turnkey. No, it's not. It's not. It's not. Right?
Yeah.
And so
Yeah.
I think, like you said, sometimes I know a lot of people get lost in terms of like, oh, but I'm gonna have to give up a cut of the gains or the revenues or whatever. But the flip side is it's you're paying for an education, right? Yeah, provided that the person you're partnering up with isn't a scumbag, right? For those that are scumbags, yeah, I really hope you guys get weeded out quickly. But there are lots of responsible, honorable people who want to do good business, right? And for me, one of the bad narratives I seem to stumble into that I correct is, oh, but either I don't have money or I don't have expertise and I don't have da 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 da. And for me, one of the things I like to fall back on is typically people, for something to work, you need three things, right? Most business things. It's money, time, or experience. Oftentimes, people don't have all three enough to make everything work, right? So if you have expertise and or time, then go find someone with money, right? Because for me, like a lot of my high earner people who are earning it through like W-2s, they don't have time. They don't care. Like by the time they finish their job, they come home, they have a lot of money, they don't know what to do with it, right? So if you prove yourself to be an operator, they'll be like, look, I know you're not a skis ball, right? I have a lot of money. I hear you doing investments. What if I just took some of my money, invested with you for you to do whatever, right? Not talk to your attorneys and make sure that you guys aren't doing anything illegal, because things like accidentally doing things that you should have done under syndication will get you in a lot of trouble, right?
Right.
But and talk to your tax advisors, pay for the things that'll keep you out of trouble, right? As a CPA,
Yeah.
I found there were these instances where like, oh, like we started a flipping business and then we got hit with this crazy tax bill. I don't understand why I have to pay the IRS. Because you flipped like 13 houses in a year. There's a tax code for that. Did no one tell you? Like, no, we thought that it was gonna go under the the $250,000 rule. I'm like, that's so
Yeah.
your primary residence, 2 out of 5 years. Like, I really wish you'd have had a 5-minute conversation with your tax professional, and this would have been cleared up. But now you're looking at a 6-figure tax bill, and I can't help you. your tax advisor probably can't help you, right? But with that said, on this flip side, it's also you likely made, well, in that case, he made an astronomical amount of money. It's just they didn't partition out the tax money, right? But these are things that I think
Right.
when you speak with an experienced person, they'll be like, oh, by the way, if you're doing like a monstrous amount of flips for the year, maybe talk to a tax person, put some tax money aside, and keep yourself out of trouble. Because the IRS doesn't care. They want their cut. They want their pound of flesh. Right?
Yeah, absolutely. Yeah, when and again, I'm not a tax advisor, so I can't give anybody tax advice or financial advice. But some of the strategies that me and my partners use is like we put everything under an LLC, its own entity, and then what I do is I take self-directing or self-managing 401ks and associate it with each of the LLCs. And basically, what that does is it takes the net profit from each of the LLCs and it tax defers the net profit. So now once it's in a self-managing 401k, there's a lot of things you could do with it. And then there's also some IRAs that or self-managing Roth IRAs that you could use too. The strategy that I've shifted focus on is now the irrevocable complex trust, which basically says that anything that you have that's an asset, whether you personally own it or an LLC owns it, you can roll that into that trust, and the trust becomes the legal entity that owns that asset. And the trust has the ability to do a lot more things that you and I wouldn't necessarily be able to do because of the way the tax laws are structured for these types of trusts. And these are trusts that the Bill Gates and the Jeff Bezoses of the world use. They aren't cheap. I mean, the ones that I work with through a financial firm that I have a great relationship with, they cost about $25,000 per trust to set up. But it's well worth it. If you're talking about, millions or tens of millions or even hundreds of millions of dollars worth of assets that you want to make sure that you're not paying taxes on day in and day out, then that's the direction to go. But again, you really need to talk to a financial advisor and a tax advisor on how those things get structured and how to utilize them. Because at the end of the day, now we're talking about complex stuff that the average individual doesn't have the time to learn nor the mental capacity to learn because you're focusing on other things, right? The last thing you want to do is be your own tax advisor and financial advisor, right? So what you want to do is you want to investigate before you do some big deals and or start going crazy on multiple deals, because at the end of the day, like you said, you're going to end up having at the end of the year to pay those taxes. It's all capital gains taxes. You don't qualify for any of the residential tax breaks and deductions that primary residence owners would get. So you really have to know what you're doing and be prepared for it. Otherwise, you can get penalized if you don't pay those taxes by the end of the next year, April 15th deadline.
Mm-hmm. Absolutely. And I imagine this. We're definitely not gonna have enough time to go through every possible scenario. But for instance, if you were to deal with, let's say, I know we have a lot of agents in the office right now who are very curious and they don't know where to start. But obviously, this applies to not only the real estate agents. For me, it's anyone, right? But I do tend to the realtors that I speak to. Y'all know who you are. I tend to keep harping on them because for me, it's I'm a huge fan of habit stacking, right? And so for me, it's how are you going to be this advocate for this business or this industry, and you're not even a participant, right? But the other side of it is, then the next level up is you're doing this anyway, right? You're doing this anyway. You're doing this work day in, day out. You're looking at, people look at properties and listings, but I see it as potential deals. Day in, day out, you're looking at deals, right? So if you just took a little extra brain power to see and analyze, is there, I mean, you don't have to go deep dive on every single property, but over time, you might be able to see a trend of, okay, this one doesn't quite look like the others. Is there an investment opportunity here, right? And if there is, for me, I'm like, please, please, please don't just pass it by because your buyer isn't looking at that. In that case, copy and paste it somewhere, send it to someone who you know is in the investment space and be like, hey, does this make sense to you? Right? And I think a lot of folks forget that investors, a lot of them, are frothing at the mouth for a deal, right? And the good ones will pay you top dollar to find them good deals, right? And I think this is where they lose their mind, where like a residential buyer seller might want to essentially get you to negotiate down your commissions or whatever. A good investor, look, as long as well, maybe I speak for myself. If everything pencils out, I already mathed in potential commission and finder's fees and all that, right? And so for me, if the deal is solid, I'm not negotiating anything. I'll give you the full thing. I don't care. You know why? Because I want you to bring me another one, right? That's like, it doesn't serve me to undercut the food on your plate if I'm gonna eat, right? I think everyone should eat, and if I feel like if I keep your belly full, you're gonna give me another deal, right? And it only makes sense.
Yeah.
So for agents, please, like if you are finding stuff that is in that investor space, find people who are investment hungry and be like, this is what I found. Yes or no. If you don't like it, tell me why. Make a little checklist of notes, right? And I know we have in our office, we have an investor group that started up. I know we have a network of investors. So if you guys are ever curious, I mean, definitely reach out to Greg, reach out to me, reach out to anyone. Like, you're going to have people. And I think that's where it's almost unfortunate, because I feel like, a lot of agents have stumbled into, oh, I think this is actually they didn't realize. They're like, oh, I don't know how the hell I'm going to sell this for market, right? Or they give up listings because they're like, oh my God, this house is a train wreck. In the back of my head, I'm thinking, well, did you have a conversation with the owners in terms of potentially just giving this to an investor, right? Because no one, like if it's a neighborhood with $1 million homes and this house is trash, like hot trash, and there's no way in hell you're ever going to sell this for $1 million in this condition. And you have the conversation. Sometimes the seller goes, yeah, we know, like the roof is falling apart. The windows haven't been updated in 60 years, right? The pavement's cracking. The trees have destroyed the main lines, right? And I'm like, we know, right? And you'd be surprised. Some people are like, look, we know, okay? Like, I just want to sell this, right? And for me, it's just the back end of that is there are instances where, like, if someone brings me a deal, I'm like, look, if it's a flip, right? And I'm gonna put it out there, if it's a flip, once I'm done with the rehab, I'm more than happy to give you back the listing. Right? Like why would I give it to someone? You brought me the deal, I fixed it, I flipped it, right? It's ready to go, and you know what? Why don't I just give you back the listing? Right? So if you're worried about but it's not worth that much money on the initial purchase, well, guess what? You get the top dollar on the back end. Who cares?
Yeah. Like I've actually given agents both in New York and New Jersey an opportunity to work with me and basically said, listen, if you've got a property that's in bad shape and it falls under an investment, fix and flip, or buy and hold scenario, let me know. And it hasn't gone well because for two reasons. Number one, it's pretty much boiling down to either the agent doesn't understand how the fix and flip market works, right? You can't ask an investor to pay what the owner is asking for the property at retail. There's just not enough meat on the bone for an investor to pay that kind of money. So the agent really needs to understand how the investor crunches their numbers and what type of properties they need to be looking for on behalf of the investor. I've worked with some agents who just don't have a clue, and they're kind of like the people that walk through the door of my events for the first time, right? They're looking to get in a fix and flip business, so you kind of have to teach them that whole aspect of it. And quite frankly, as an investor, you may not have all that time to teach a realtor how to become good at crunching numbers for fix and flips. The other aspect that agents will run into is the seller just won't budge. Right. In a market such as this, if that, $1 million house, for example, that you brought up, where it needs a ton of work, the seller's going to say, I don't care. I'm not putting a dime into it. I know I can sell this for my asking price. Go find me a buyer. And there probably would be a retail buyer out there that will pay what the seller's asking and doesn't care what the condition of the house is. They're just looking for a house to buy. And that property may scare 90% of the retail buyers from putting a bid on it or an offer on it, right? So now those retail buyers that are willing to do it, they stand a better chance of buying that house, right? Because there's fewer bidders and buyers for that property. So really, at the end of the day, realtors need to kind of look at the property and say, okay, where in the two scopes of this market can I push this property? Can I sell it to an investor, but I know I got to make sure that it's priced for the investor to make money off of it. And once they're done, naturally they're going to put that property back into the realtor's hands, right? And I tell the agents, if we do the deal, you're going to be able to relist this property once I'm done. I'm an agent, but I'm not taking that business away from you. I'm giving it back to you because I value the relationship, right? I want everybody to make money off the deal. And then if it's not investor friendly, can you get the owner to understand, hey, look, in order for me to sell this house, it's got to be priced realistically in this market.
Absolutely. And I'm going to add a little caveat, right? Because obviously I imagine they're going to be agents. Well, they're saying, well, if you're not going to get the top dollar, how are you going to be representing a seller? Let me be clear, right? And this is my personal thing. Don't lie, especially if you're a listing agent. Don't lie to your client, right? Like I'm not this absolutely not what. And I imagine, Greg, you're not saying the same thing either. For me, my approach would be, I will have a real heart-to-heart, straight up. I'm not lying to you. I'm going to just put it all out there. Your house is not going to be worth $1 million, period, right? Can it potentially sell for $1 million? Maybe, right? But more than likely, if you look at all of these comps, I won't even look at the listed. I will give you what sold in the last 3 months. Look at the condition of the house. Look at the square footage. Look at the bed and bath, right? Look how long it took those to sell, right? If the market if the market conditions are the same, if and you see multiple listings now currently at that ballpark with better condition than your house, do you really think you're going to get $1 million when every person who's walked in this door, contractors and all that, multiple people have said it's minimum $250,000, $300,000 worth of work? Maybe. I mean, you're gambling here, right? So if for me, I'll be upfront with them. Look, if you are okay, like what is it that you're actually looking for? Are you looking for top dollar, or do you want to offload this headache? If it's a headache, then for me, generally, I would say an investor is likely going to be the best way to do it, right? Because they will take warts and all for the right price, right?
Right.
If you're saying no, I want absolute top dollar, well, then just understand that more than likely most investors, they're not going to do it, right? Because investors, they look at math. They don't care about how beautiful the old crown molding was, right? It's does it pencil
Right.
out
Yeah.
based on the price that you're gonna ask and the work that they have to put in, and whatever their method is. For me personally, I like buy and holds, also known as the Burr method. But if it's a flipper, well, they're beholden to what they might be able to sell it off. So there has to be meat on the bone. Now, again, Mr. and Mrs. Seller, if that is not acceptable to you, okay, but you know what? Enough said. Okay, we'll list it at the traditional method, but understand the cost, the price still has to be reasonable. It'll be more than what
Right.
an investor will look at, but there's that. But some nowadays, I think we're seeing more folks who they got to that point of like, you know what? I don't even care, man. Like, I mean, not as much as years past. Right now, I mean,
Yeah.
it's anything that comes out. There's gonna be high demand, right? But you do still get these little pockets where some sellers are just like, I don't care. I don't care. Just if you could get this sold within the next 2 weeks, just do it. I don't care. Like I'm done. I'm done. Right. But
Right.
I think that's where it gets interesting.
Yeah. And it's been a struggle for the past, I want to say, year in the fix and flip and buy and hold market because at the end of the day, whether it's a pre foreclosure, a short sale, or even bank owned properties, like that's something I also do is have access to REOs. It's tough to compete when you have a large pool of retail buyers, and they're willing to pay 20, 30, even I've heard some people pay as high as 50% above asking for a property. It's just insane. But that train is pretty much coming to an end. Rates are going up. People are starting to realize that you can't afford to pay 20, 30, 40% above asking and still pay 7% interest on a property. It's insane. You have to start being realistic on what you're willing to pay for something. So, we are, my prediction is, and some of my other partners' projections who got involved in the last market back in '07, '08, and '09 are pretty much saying that based on the data that they're seeing, in fact, we're looking at the number of homes sold in the most recent data that we got, and there's a decline nationwide. And what's happening is the average price is dropping, and then you're seeing home builders scale back the construction that they're doing. One of the things that they've done is the 3-2-1 buy down, which was a big mistake. That's going to come back and bite them as well in the rears. So the triggers are starting to happen, similar to what happened in '08, and we're going to see a repeat. The question is how bad is it going to get? We don't know the answer to that. Only time's going to tell on how bad it's going to get. So for those of us who are in the investment world, who do these things to buy and hold and or fix and flip, there's going to be an opportunity for us to jump back into it. And then it's just a matter of, what investors have the cash flow to buy and gobble up a lot of these properties. And as a realtor, you really want to build that Rolodex. You really want to build that network of buyers, because at the end of the day, where the retail buyers won't have the ability to buy anymore, it's your investors that are going to come in and make up that space. And those are the people you really want to have a great relationship with.
Mm-hmm. And I guess if I were to simplify into actionables, right? And obviously, realtors, please, like, I really hope you're doing this at a bare minimum. But if you're not a realtor, still, you can use, for me, like, I think one of the easier ways to do it is as you have conversations with people, put them in buckets, right? Like if you have,
Mm-hmm.
oh, like I bought another such and such house. Is it primary? Is it vacation? Or is this person buying like investment properties on the regular, right? Put them in a bucket, right? Or you have a conversation. Oh, I am looking for properties, and I just can't find any. Put them in another bucket, looking for the potential buyers, right? And the reason for a
Right.
realtor is very obvious, right? And let's say you get a listing and the prices that the seller asked for doesn't make sense, and let's say 3 months, 6 months pass around, and you keep dropping the price, and now it's getting to a point where this is the price I asked. I said makes sense anyway, and happens to be closer to what an investor might want. Well, guess what? As obviously it'll still be on the MLS, it'll still be, hopefully you're still doing your proper marketing, but as if it gets to a situation where it gets closer to what an investor might actually pay, guess what? Now you have a Rolodex separate for investors. Hey, I did have this listing, it didn't move, and now the seller is actually open to this price. So at this price, and realtors, non-realtors, doesn't matter, please just learn how to do basic analysis. There's actually online investment property calculators you could try to use. It won't be, understand, it's not going to be perfect, but at least you could ballpark it, right? So if you know how to fill this out, right, most of it is Google fooing the details of the property, right? Usually it's not that complex. You can say, hey, look, this is what I found, roughly, obviously, is an estimate. Is this something that makes sense to you, right? If they're more interested, okay, now you have a solid lead, right? Whether it's a buyer, an investor, if you're a realtor, then you at least like you're not going to be that realtor who puts amazing investment opportunity. Meanwhile, it's negative like 6,000% cash flow, right? And please don't be that realtor, right? Please don't be that realtor. But now you have a means of opening up in my opinion, a pipeline, right? And
Right.
how many times have you gotten a person who sent you an email? Hey, Greg, like I got this amazing investment opportunity. It's 6 units, and they want like $6 million, $6 million for it. But it's each room is renting for $1,500.
Yeah. They still come in, believe it or not, and it's just a matter of I have to dissect it, do the due diligence, crunch the numbers, pull up as much data as I can from various sources, and make a determination. What is the true value of this property as is? What could it be worth down the road? It could be a value add of some kind. The number crunching does differ between residential and commercial multifamily. So for an agent that does come across a 6 or 10 or 15 unit property, the game changes a bit. The number crunching is still there, but it's a different set of numbers. I don't know of anybody that over the last, I want to say, 12 to 18 months who's fixed and flip a commercial multifamily. Usually the buyers in that space, they're doing a 5 to 10 year hold on that property because the rental market was hot. Now that rent rates are starting to come down, not in all areas, but in some areas it's starting to come down a bit. You kind of have to wonder, okay, well, what's your cap rate going to be, and does it make sense to do that deal? So, number crunching, whether you're helping a family buy their first property or their second or third property, or if you're helping an investor, you got to be good at crunching the numbers. And there's plenty of spreadsheets out there that you can Google that'll help give you the ability to plug in numbers and do the number crunching. Just the basics. It's really all you need to do at the end of the day. No one's asking you to do a deep dive. The deep dive really belongs to, and the onus is on the investor or the person buying the property. You just kind of have to give them some preliminary numbers for them to make a decision. Yeah, let's go forward with this, or you know what, I'm going to pass. Let's go find another deal.
Yep, absolutely. I mean, I guess now I'm going to start digging in to see what you were. Maybe I'll pick the master's brain here. Are there any particular areas, states, cities, whatever that you're finding to be promising or curious about for the next 5-10 years?
Well, so the rule of thumb, if you're an investor, is always look for landlord-friendly and investor-friendly municipalities and states. Right. That's rule number one. Rule number two is look for what's happening in those areas. So when it comes to commercial multifamily stuff, we're always big on job data numbers. Is the area growing in population? Right? Are people getting good paying jobs in that area? What's the median income? Crime rate is also important, right? You want to make sure that crime rates are low, right? People feel safe. They want to buy and live in that area. They want to send their kids to school in that area. So a lot of that information is very important to crunch so that you get an idea of where to invest. Being licensed in New York, I'm very skeptical of doing a deal in New York only because prices are still high, and I hate to say it, but it's not an investor and landlord friendly state, nor is the city in some areas landlord and investor friendly. New Jersey tends to be a little more landlord and investor friendly. I get people at my New York RIA events who say, "Oh, you know what? I'm not doing anything or looking to do anything in New York right now, but I hear Jersey's great. Can you help me get my foot in the door in Jersey?" Absolutely. There's still areas of Union, Hudson, Passaic, Middlesex, and Monmouth, and even Ocean counties in central and in northern Jersey or even Western Jersey, where there's still areas of opportunity. I've done a couple deals in Philly recently. I'm not a big fan of Philly anymore. In fact, I've got one last property listed in Philly. As soon as it's sold, I'm done. I'm washing my hands of Philly. Things have changed and gotten worse in Philly. It's just not a space I want to play in. Florida has always been big. There's still a lot of opportunity in Florida, especially on the western side. Tampa and Fort Lauderdale and the Panhandle areas. There's a lot of people still big on that space. There's opportunities in the Carolinas and Georgia, Tennessee, Kentucky, Mississippi. I want to say the Southeast is still a hot market. There's a lot of investors. There are a lot of investors going down there looking for opportunities. I want to say Texas, for the most part, you really got to be careful. Austin's already got a red flag. A lot of people are being told stay away from Austin. Some of the other towns or cities like Dallas or maybe Houston, there might be some opportunities, but you really got to be careful. There's already markets like Arizona and California that are red flags. No, people are just saying stay away from those states. Even in the West, up in the Northwest, just stay away from them. There are very few opportunities. They're not investor friendly or landlord friendly. So at the end of the day, you really want to take a look at the numbers. Go to events. I always tell people, and I'm not just saying this to promote my events. Go to any real estate event and ask around where investors investing. Get a feel for what the consensus is telling you, because that's always going to be an indication of where you really want to invest your next opportunity.
Absolutely. I mean, as a side note, out of circumstance, I find myself going past Bayonne maybe a couple times a month. There seems to be a lot of development in that space. I don't suppose you have any inklings in terms of what's going on there.
Yeah, so New Jersey's doing what New York has done best for the last few years, and that's promote affordable housing. And there's nothing wrong with that. That's great. I think it's a great idea. But it's how it's being proposed and who the players are in that space. For investors such as you and I, affordable housing projects, it's tough to get into that game. It's almost impossible. It's basically a who's who of the real estate development world. If you're the Kirshners of the world who are big players in Jersey, you're going to be able to do any deal you want, and no one's going to question you. If you're Fred Davies of the world, you'll be able to do stuff in Edgewater, New Jersey, right? So when you're a heavy hitter like those guys, you can do pretty much anything you want. But for the average investor, such as you and I, we're not going to be able to play in that space. But that's not to say that there aren't other opportunities. What those developments do is it attracts buyers. And that's what you want, right? If you're an investor, you want to invest in properties where people are flocking to. So if people are flocking to these affordable housing developments, then that's going to help you as an investor who buys a smaller property or a smaller project be able to buy it, rehab it, put it back on the market and sell it. because not everybody's going to be interested in that affordable housing project or property. They may look at it and say, hey, you know what? I still want to buy a single family home, or I may want to rent in a smaller project or property. So there'll be opportunities there. You just have to, be mindful of the area and who's doing what in that area. That's all.
Oh, that makes perfect sense. I mean, currently my sights are being set in Georgia, so shout out to any Georgia realtors out there. If you guys have investment properties, please hit me up. If it's not me, we have investor groups, we have people who are hungry, and I do happen to know folks, and then depending on folks. I mean, generally money talks. So more times than not, it's the money. But I do understand there are folks who just don't want institutional investors in their backyard. I do know folks who are looking to make moves, so you're not going to have some corporate nobody move there, right? So if that's what you need, still hit me up. We'll make that work out. But yeah, for me, it's Georgia. Actually, a lot of the states that you mentioned were also places in my purview. It's just for me personally, I have this. It's not like a hard set rule, but it's a philosophy that I'm following right now. Is just, the places that I would likely visit on a regular basis or potentially move to in the distant future. I have dear
Right.
family friends down there, and every time we go, my wife, who usually isn't too fond of moving, like leaving certain comfortable areas, she's like, "This Georgia place isn't as terrible as I thought it'd be." And now she's like, "Oh, like, can we go? When's the next time we're gonna go?" So for me,
Right.
it's just, I see a lot of problems there. Me and my
Yeah.
theory crafting analytical brain, I'm sitting there, I'm like, how is Atlanta not going to be big? I don't, for me, it's just, I don't, I'm usually the long term guy, right? So for me, I'm not worried about what the market is going to do next year. I'm worried about what the market's going to look like in 10, 15, 20 years, right? So,
Right.
and there's, different folks, right? For me, from a tax perspective, if you were to say invest in somewhere like New York, where honestly, it's going to be really hard to find you a cash flowing deal in year one. But if you're in a situation where cash flow doesn't really matter for you, right? Like lately, I'm seeing more folks in that New York investment space because they just want the depreciation for their tax planning, right? So,
Right.
you know, this is where it makes sense for you to talk to your tax advisor because one who is knowledgeable will explain to you why these people are buying deals that seem to make no sense, right? Like we ran the math, you're barely breaking even on the cash flow. Why are they buying it, right? Why, and also, why are they putting like $10 million down, $10 million on this piece of crap property that doesn't make money? Well, more than likely, well, not every scenario, but the ones that I've seen is look, they're not losing money, like they're not making a crazy amount, but what they're likely doing is they're taking all that depreciation that they get from that building, maybe doing a cost seg, and taking crazy amounts of depreciation to offset their income. And if they are a real estate professional by IRS standards, now they're in a situation. Well, guess what? They made $1 million of income. Well, that is now from an IRS standpoint zero. Why? Because they know
Right.
how the tax law works, right? But don't get
Right.
it twisted. A lot of them also have a lot of investment properties down south, Midwest, places
Right.
where cash flow is stronger, right? And the appreciation might not be as great, right? So what are they going to do? They have proper tax planning. They set up proper business entity structures, right? Maybe they have management companies. Maybe they have holding companies. If they don't have S corps, I'd be very confused, right, for themselves. But
Yep.
maybe they have trust set up. No matter what, just please, 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 as you go through each step of the journey, investing in yourself also includes having the people like who are competent and knowledgeable in your space to help mentor and guide you, right? There's no need for you to learn all the tax law if you just have a person you could pay to give you the proper tax planning. Same thing with a lawyer, right? Do you have a trust attorney? Do you have, maybe on the upper region reaches, you'll have a tax attorney on your payroll, right? But on the investment side, find a mentor, right? Find partners who are experts in the space. Reach out to Greg, right? And I think this is the one thing that drives me crazy because I think we got to the point of we have to do it all by ourselves. Well, then you're gonna lose out on all the deals that you wouldn't have had anyway, right? So you're making me. I'm getting that little tingle now. I'm like, do I have to figure out scheduling to get you on a weekly basis, a monthly basis? I'm like, oh, this is gonna be a problem because my nerd brain is going. Because like right now, if you think about it, right, we've been talking for almost an hour, and at this point, honestly, this is like super fundamental. This isn't even like real one-on-one class yet, right? Like if you really deep dive into all the potential strategies, all including tax planning, right? Which that's a whole different league on its own, right? But if you just went through, all right, what's a flip? What's a wholesale? What's a burr, right? What's subject to, right? Which, by the way, as much as I love it in conceptually, right now it's getting me a little nervous. That's another aside, right? But like this is something where I wish more agents, even if they're not active in the investment space, had at least a fundamental understanding of, right? Because I think it would vastly increase their reach. Well, with that said, I mean, Mr. Vartanian, thank you so much for your time. And again, but with that said, I do thank you again for your time. And for anyone else out there, if you have any questions, come reach out. Otherwise, I'll catch you guys on the next one. Peace.